Hi, this is Helen Chong. I'm the owner broker of Haylen Group. Welcome to our March 2014 newsletter. This month, I want to talk a little bit about what people have been asking me, and they're wondering if this housing recovery is going to be sustainable. We're going to take a look at this from two different angles. One is from the government perspective, to see what the government has been doing for us, and then secondly, we're going to look at the 2006 versus 2013 housing market differences and how that can make a difference on what will happen when the interest rate goes up. Now, in terms of the government perspective, we know the Federal Reserve Chairman Janet Yellen just announced on March 19th that she is going to keep the interest rate low and to stimulate the economy. But she is going to pull back on bond buying for about $10 billion every month ongoing forward. But knowing that she is still trying to keep the interest rate low to continue to stimulate the market, which is very beneficial for our housing market as well. And a lot of investors actually, they are expecting the Federal Reserve probably going to increase the interest rate by second half of 2015. So what does that mean when the interest rate goes up? And people ask me, do you think that that will cause the market to crash again? Are there going to be a lot more foreclosure that's going to come onto the market again? Now, let's look at 2006 versus 2013 and how the quality of buyers are different from 2006 versus 2013. In 2006, there were 21% of the buyers bought the property with no money down, while 2013 there were only 5.9% of people bought with no money down. Now, in 2006, there were 43% of the buyers bought it with second mortgage, and there were about 33% of the buyers bought it with an adjustable rate mortgage products. In 2013, there were only 2% of people bought it with second mortgage and 4% with the adjustable rate mortgage products. So when you look at 0% down payment, second mortgage, and also adjustable rate mortgages, those are the three factors that contribute to a very high risk borrowers. But in 2013, we have very minimal of the people are using these three combinations. So the quality of the borrowers are much higher. And on top of that, people have a lot more skin in the game. For example, in 2006, there were only 10% of the buyers are cash buyers. 2013, there were 27% of the buyers are cash buyers. So with so much more money in the property, that is much less likely for people to just walk away from it when the tough time comes. Now, in terms of affordability, in 2006, the average mortgage rate was about 6.4%, while in 2013 it was about 3.8%. So when you look at the affordability index in 2006, it was 12% versus 36% in 2013. So you see that people can afford their mortgage payment much better in 2013, and again, more likely for them to continue to pay for the mortgages compared to 2006. A lot of people actually couldn't really afford their mortgage payments. So now we talk about the interest rate hikes. Yes, the interest rate is going to increase sooner or later, most likely end of 2014 and probably 2015, and we're going to see the interest rate hikes. Now, so that's why when you ask me if this is a good time to buy, yes, if you compare now and then later, it is a much better time to buy now because of the interest rate, despite the fierce competition in the market. Especially if you're an investor or a landlord, you plan on owning the property for a long time, holding on to it, I would really encourage or recommend you to buy it now. Because as you see, the rent has been going up years over year. Let's just say, for example, in the Silicon Valley, the rent has gone up 8.9% in 2013, while we are expecting the rent's probably going to go up another 2.9% in 2014. And so for the low borrowing cost and the rent increase, it is going to earn you a much better rate of return on the long run. And also a lot of businesses, a lot of corporations are expanding in San Jose in the Silicon Valley area, which is going to bring a lot more workforce as well. and also in downtown San Jose, there are a lot of revitalization projects going on. BART is going to extend their line from Fremont all the way down to North San Jose. So these are some very exciting things that are going on in Silicon Valley, and I'll definitely would love to talk a little bit more about it in our next newsletter. And this month, I actually wrote a blog, talked about living trust for our existing homeowners out there to consider. The reason is that living trust has a lot of benefits. So I had invited my attorney friend David Miller, who has been an estate attorney for 45 years now, and he had established over 15,000 living trusts in his career. And he had given me this write up that I am sharing with all of you, to talk a little bit about the benefits of having a irrevocable living trust. So I would really encourage you to take time to read about it and see if it is really a good fit for you and your family, and how this may be able to help protect your assets as well as your beneficiaries. And last but not least, I would love to invite you again to join us on our Facebook and all of our social media sites. Please follow us, because we do post a lot of daily real estate news, as well as some interesting parenting articles and some coupon deals every single day. So we would love to keep in touch with you and keep you updated on our real estate. If you have any suggestions or feedback, feel free to email me. My email address is helen@haylengroup.com. And thank you again for your time to watch our video, and I look forward to seeing you next month.